Good morning, fellow traders from whichever part of the world you're joining this daily morning market call from. My name is Kefa Eric, and one of the market analysts here at HFM, your trading partner, financial partner, and financial broker in Kenya and beyond. This is going to be a pre-recorded YouTube video. Kindly visit the YouTube channel at HFM Kenya. Like, subscribe, comment, click on the notification button so that you are not left out on the great content that we produce from time to time on the YouTube channel. So I'll give a 3-second moment of silence for you to actually click the subscription button and notification button. So literally. Thank you. So moving forward, good morning everyone. Let's proceed. Usually we normally begin from a fundamental analysis point of view to see what is happening in the economic data space. So it was quite silent from Monday until yesterday when we started having news coming in. So on Monday we had ECB President Lagrange's speech, which was a follow-up of the former interest rate minutes. No data was printed on that because it was a follow-up meeting. Then we had the Reserve Bank of Australia also coming up with a minutes meeting. Also, it was a follow-up. We see no data was presented. For the ones who are getting to hear this for the first time, central banks normally meet occasionally to monitor the economic growth of their countries, and they do this through monetary policy. By monetary policy, to achieve two things. Number one, to achieve economic growth by ensuring healthy employment status, and number two, controlling inflation, right? So later we had the Bank of England coming out to monetary policy. Also, it was a follow-up. Then from today, we now started having high impact economic data coming out. We have CPI coming out from the British pound, and we are able to observe that the CPI, which has come out this morning from the Great British Pound, inflation rate year on year is has come out positive at 2.3%, higher than expected. Data is being printed here, so we shall see the Great British Pound becoming stronger. And if you go to your charts right now on GBP USD, you will see a very sharp correction to the upside because of the positive data has come out. We see here it's rolling, it's updating, no problem. Later yesterday, we had, let me go to yesterday, this week. Yesterday, we had Canadian CPI coming out also positive, year on year coming out 2.5%, higher than the previous 2.3 and higher than the anticipated 2.4, strengthening the Canadian dollar. We'll be able to demonstrate that also in a few. Now, with that said, what is happening geopolitically so that we are able to monitor the movement of precious metals and generally the asset class called commodities, those are precious metal and commodity like oil. The war in Eastern Europe is escalating, and we see that, like we indicated yesterday, Biden has authorized President Zelensky of Ukraine to now use the donated weapons. These are ballistic missiles which can go deep into Russian territory. This was not the case before the election. Why? Because it was very unpopular and could have further compromised the victory of Kamala Harris. Nevertheless, now after the election, we see Biden taking a different diplomatic stand, changing his diplomatic approach into that and allowing Zelensky to use those weapons. Now, this has had a number of reactions from world leaders, and Putin was expected to fight back or to wait for Trump's entry into White House, on 20th of January. next year, 2025. But he chose to tighten his war front, so we see war escalating there, and we shall see the reaction on that on gold. Of course, when there is fear, we see gold moving in a bullish trajectory. Okay, and that is why it's causing the current bullish emergence of the current bullish trend that we observe. Moving on to the charts. Very nice. Moving on to the charts. Beginning the usual suspects, US dollar major pairs. We see that the US dollar has been strengthening drastically, and that is why we see for US dollar quote currencies, it has been moving in a downward trajectory. Why? Number one, because of the US dollar strengthening. The US dollar strengthening because of the good economic status of the US economy right now, and number two, because of Trump's victory. Why Trump's victory? Because Trump promised some things to the electorate of the US, and now they're optimistic that he's going to implement them. You can call it the Trump's trade if you're familiar with the term, which is simply a reflection of the policies that Trump promised the people of the United States. Which policies are these? They are quite a number, but narrow down them into two. Number one, low taxes, less regulation for US-based companies. So it will give investors a chance to invest in US, which is strengthening the US dollar. And number two, more taxes, more regulation for foreign companies, which will discourage investors from bringing in companies that are not originally from the US. Remember, if a company is originally from the US, employs more people, boosts the economy. So that is why we have been seeing it moving in a downward trajectory. If you could go even to a much more lower time frame, we see it fundamental analysis and technical analysis perfectly aligning. We see that it is bouncing off from this particular key resistance level here at 106027. As news comes out, this might change, but as it is right now, the US dollar is quite doing well. It is, however, important to note that Euro released a data. Let me confirm that. This must have been economic data coming from the Eurozone is also indicating that it might be recovering. That's why we see it retesting this resistance level occasionally. We'll be monitoring that as it proceeds. If it closes above, confirming that the euro is gaining over the US dollar, we will consider getting into a long trade. If it continues going below and new data is coming in, which will confirm the bias to the downside. The same scenario we shall see on GBP USD or the cable, if you may like. Remember, guys, we have just said this morning, in inflation rate year on year for GBP has come out positive, and it has come out positive at 2.3%, higher than the previous 1.7, and the anticipated 2.2, suggesting that the Great British Pound is gaining strength. Now, this is why on the GBP USD we see it moving in a bullish trajectory. Or originally it was in a downward trajectory. The USD was having a field day on defeating the Great British Pound, but right now we see it's retracing to the upside because of the data printed. For AUD USD, we see it has opened with a very big gap on the daily. No, that's not a gap. Beg your pardon. It has opened in a bullish trajectory, suggesting that the AUD is regaining strength over the US dollar. And right now we see it is only negative 0.03%. To cut out the complexity of the same, in simple terms, we see the AUD recovering over the USD, meaning that the Australian economy is slightly recovering against the US dollar defeating in strength. That's why we see a bullish trajectory here. If it comes and retests this particular zone, at 0.65697, we would be getting in for shorts. But if it continue moving to the downside, and closes below the previous low that it declared at 0.6448, it will be confirming our bias to the downside. For USD CHF, we see now for US dollar base currencies, because of the strength into the US dollar, it is now moving opposite, it's going bullish. So we were looking for longs until it started giving us a bearish vibe, or a bearish momentum, if you may like, suggesting that the Swiss franc might be regaining strength against the US dollar. But until it come and retest areas of interest, we might not be concerned to get in, might go to lower time frames and see them clearly. In that case, would monitor this and get into longs as long as this high over here at 0.6 at 0.88433 is taken out, and shorts when this low at 0.88023 is taken out. But overall, we see we are in an upward trajectory. USD JPY, we had balance of trade news coming in yesterday, which came out negative, suggesting that the import and export market for the Japanese for Japan is not really doing good, which affects the JPY, the Japanese yen. So we see it moving in a bullish trajectory. Let's go to the daily and see what is happening. Nice. So when it comes and closes above the 1.56 to 97, we would consider getting in for buys, right? But when it comes and closes below the low, would consider getting in for sales. But as it is right now, we know the Japanese yen is not really doing well, is not really doing good, so would be getting in, looking for buys for this particular asset and majority of the JPY quote currencies. For USD CAD, we see it is moving in an upward trajectory, but of late we have had a little bit of consolidation. Why? The CPI data, which came out yesterday during New York session, suggests that the Canadian dollar is doing good. From the data which was printed from CPI year on year for Canadian dollar, which was at 2% higher than the previous 1.4%, that is an increase of 0.4%, increasing the Canadian power. So that's why we see it's moving in a downward trajectory. For safe entries, we would like to see it retrace a little bit into premium for us to start looking for sales, but we should be cautious until we see major lows being taken out. But as it stands, the Canadian dollar is way gaining strength. You see it has recovered up to 0.2, negative 0.02%, suggesting the Canadian dollar is regaining its strength in comparison to the USD. Moving on swiftly to Great British Pound, JPY. Fundamentally, we see that this morning at 10, that is New York Open, inflation rate for Great British Pound, which is in Britain, has come out positive at 2.3%, higher than the previous 1.7% and higher than the anticipated 2.2. So at 2.3%, what does it do? Strengthen the Great British Pound, and that is why we see the GJ is moving drastically high. I know there are many GJ traders in this room. You could consider taking advantage of that. For gold, yes, it obeys fundamental analysis, but gold will tend to be more obedient to geopolitical events. Okay, not to get you confused, but geopolitical events are activities in the world which are happening that might not necessarily mean indication of the economic health of particular countries or regions. So right now, what is the main geopolitical event happening? In the Middle East, we see Israel and its belligerent neighbors at war, but it has been quite silent of late. So we shift our focus to Eastern Europe, where we see the Russia-Ukraine war escalating, like I had said in the beginning of this morning market call, and this has had a bullish effect on gold. Why? Because when there is war and fear, investors pull their money out and put in gold, considering gold as a safe haven. Remember, gold has been here for over 5,000 years. Currencies come and go, companies come and go, stocks, indices come and go, but gold still stands, so they invest in gold. That's why we see the prices of gold being bullish. Right now we are trading at 26.28 for 2. Will we see it come and touch the 2680.62? That is a subject of discussion, of course, taking a critical look into developing geopolitical events. Now, remember, this by any chance is not financial advice. This is for information purposes, so do your due diligence and remember to observe risk management. Trade with a reliable broker, regulated broker. HFM is a regulated broker, reliable, with financial products that you will take advantage of, making you having an easy transition in your financial journey. See you tomorrow, the same place, the same time, to do things the same way that has proven profitability in the long run. Until then, take care and God bless. Thank you.